Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of AMC Entertainment, ticker symbol AMC. And so here I am recording this on Saturday morning, October 19th, after AMC closed on Friday the 18th at a price of $4.36, being up about 3.33% on the day. And so, yeah, I think the chart's looking really good. I do think it looks like we have broken out of a more recent timescale downtrend. And so what I would be looking for is possibly a retest. I will go over levels that I think we might be pulling back to before continuing higher, but it is also possible that we do break those levels. And so, I'll also go over that. But I do think that we might be continuing higher before we do start to do that retest. So I'll go over that. But really, looking at the time frame here, I just wanted to go over kind of this bigger picture. I've been talking about this for a while, and also I am doing additional AMC weekly videos now going over really, unusual whales options data, specifically with a contract that I have been accumulating a very small position. And that is really just based on the thesis that, I think we might be coming down to around 291 at this gap here to the downside, but I don't think we're going to fill it. And I think that ultimately we will be filling this gap to the upside at $6.85 within the span of the next 8 months. So I think that's pretty reasonable. And so, if you are interested in options, if you are interested in kind of the longer time frame, check out those videos. I will be doing them weekly, really just exploring unusual whales for myself and sharing that with you guys. But here, looking at the chart, what we can see, before zooming in, I did want to point out, this 786 here from the retracement going from the all-time low of 238 up to the market hours high of 1188. And so that 786 is at $4.41. We have not hit that level yet. We hit a high of 437 on Friday the 18th. So I would look for 441 to be acting as some resistance, but there are some levels to the upside that I think we might be testing. And so, I'm going to go over those. And then I do have some of these retracements here going back in time. I might pull back to show where those levels originate from, but actually I'm just going to zoom in here so we can see them a little closer. One of those levels is the low that we hit on June 25th. That was at a price of $4.33. We are currently above that, so I think that is looking really good. And then really, the level that I think we might be bumping into some resistance at is effectively this 786 from the retracement from the low of 410. Great that we're above that level now. That was the low hit on May 31st. From there, we did rally up to about 596 and really creating this range from about $4 to $6 that we have been trading in since May. So, from that retracement, the 786 is at about $4.50. That being a psychological level, $4 bills, 2 quarters, or, $1/2, we might be bumping into some resistance there, as it does, I believe, correspond with this downtrend, which is based on that high of 596 that was hit on June 6th. And then the other pivot point being the high from August 1st. As you can see, there was a good amount of resistance here. Wicks going above that level, but not being able to get any closes above it. So I do think we might be finding that as some resistance in the near future. And so now speaking about the current time frame, we can see here, I believe I drew this downtrending channel in last week's video as it was based on the price action of the 11th, so last Friday before we open on the Monday of the 14th here. And we can see from this downtrending channel, we did, struggle to get above it. That high from last week's Friday on the 11th was $4.24. We did break above that with strength, it looks like. Look at that big green candle that we saw on the 18th, not only getting above and closing above 224, but also closing above 433, as I had mentioned, as that was the prior low from, I believe, let's see, what date was that? That was June 25th hit a low of 433. So currently trading above it. I think this looks really good. But because we have had this breakout, I do think that we could be continuing higher, but I do think that 450 around there, this red line here where the cursor is, I think that could be acting as resistance, but I think we could be going higher as that downtrend from those prior highs is up here. I think an intersection of that line could perhaps correspond with about $4.60, maybe getting up to the green line here at 469, which was the high from September 30th. So that might be acting as some resistance, really between 450, let's say, and about 470. I think that we could be getting rejected there. And the reason why I think that we could be going higher before pulling back is because if we look at the MACD here, we can see that very clearly flipped to green. We've had 2 green trading days. And if we look at the histogram value, that's the number where the cursor is over here, it does change as I move the cursor. So I'm just pointing that out here. But so we can see on Wednesday, that was negative 0.004 just about. Then on Thursday, it switched to positive 0.0045. And now we are seeing it at 0.02, so getting more positive there with that MACD signal. And I do think that will be continuing higher, especially if the volume picks up. So I do think that look for moves to above 450 in the coming weeks. And if we start to see some weakness between 450 and 470, I would expect a pullback, and levels that it could be pulling back to, like I said, I think 424. That does look like it was kind of the cap over here. Didn't get any closes above it. Got multiple wicks above could not close above it. Got a wick above 424 on the 16th. So that was Wednesday, hitting a high of 426, but getting a close at 423. So just below 424. And on Monday, we hit a high of 424. Got rejected from that level. So like that was resistance over the past week, we broke above it. We might be retracing to the scene of the crime at 424. So if one wants to add, maybe waiting for a pullback to 424 would be a good idea, rather than, buying up here at 469 or 470. That might actually be the top before we do pull back. Other levels that we might be pulling back to, if we continue this downtrending channel, so I will do that here. If we continue that to include Friday's price action, that does look like it has expanded a good amount. And even with that, we have broken out from it. So I think that looks really good. And a retest of that scene of the crime would correspond with right around $4.24, pulling back to the top of that channel. So that is definitely something to be thinking about. But we could also consider the midpoint of that channel. That is now going to be around $4.04, where this prior low was that was hit on October 9th. We did sweep that low the following day, putting in this bullish engulfing candle, hitting a low on the day of 403. So maybe we see a pullback to around maybe $4.05, and that being a retrace to this downtrend that had acted as, the midpoint effectively of this channel. Notice that we did trade above it over here before breaking lower. And so, yeah, I think that pulling back to around $4.05, maybe $4 to $4.10 is kind of a good range to add back in if we do break below 424. But I think, my thesis with this effectively over the course of the next week is that we're going to break up to about $4.50, maybe 470, get rejected from that level, as that does correspond with this kind of, major downtrending resistance that we've seen going back to that high of 596. So if we do pull up to that level, even if we do break out from it, maybe get a wick above to 469, we need to be seeing closes above that level. And with this other level here, this uptrend that is based on the low of $4.10 hit on May 31st, as well as the other low that we hit on May 5th when the markets gapped down, that was at a low of $4.41. So again, I think that level is significant. And so with that being said, we've got this downtrend that we need to be breaking above. We haven't seen that yet. 469 being a fun psychological level. That might be resistance for a wick up. I think if we get a wick above, even a close at 469, we really need to be seeing multiple closes above this downtrend. However, we have not seen one close above it yet. So seeing one close above it might be a good sign of encouragement, but that could always be a fake out break. So I would look for two closes above this downtrend. You can draw it on your charts based on the high from, like I said, June 6th, as well as the high from August 1st. That downtrending level, need to be getting multiple closes above it. And then if we do, the next level to contend with is this uptrend based on, again, the low from May 31st and the low from August 5th. So lots of levels of resistance ahead of us. But, I think that the momentum that we're seeing, whether that's in the MACD, also the RSI, I forgot to mention that, we did hit a low on October 9th of 28.26, did dip below 30, so being in that oversold territory. And the momentum does seem like it is behind a move to continue before getting rejected, as the current RSI is right around 47.03 in the 50 range, the midpoint there. So, I think that we could start to see this move up closer to 70 with a price around 430, with a price around 450 or 470 being the top. And so I would look for the RSI to be around 70 before we do get there. It doesn't have to get into 70. The RSI doesn't have to get to 70 before we see a pullback. So, I think that this move, like I've said multiple times in this video, is just going to continue, but I do think we will be seeing a rejection before a breakout from this uptrend. I think that we need to, because we've already seen this, breakout on the shorter time frame, this high, this channel really just going back to September 9th. And so we have seen this kind of micro breakout. I think we will see a micro retest pulling back to 424. I think that's going to be a great dip buying opportunity. But if we do break it, like I said, 410 down to around $4, I think that's kind of the next dip buying level. But of course, as I had mentioned in previous videos, for me personally, I am prepared for price to be going down to 291 or really just above it. I don't think that gap's going to be filled. So I personally am preparing for a dip to $3.50, as I think that's going to be a really great discount, and I think that could be very near the end of the sideways trading between these two gaps before we start to see a fake out tease of a fill of this gap. I don't think that's going to happen. I think the lowest that we will go is probably around $3 a share before we fill this gap to the upside and move up to, around $12 a share. So that is what I am looking forward to. I hope you guys are too. I hope you are also enjoying your weekends. But as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more content like this. Thanks a lot, guys. Take care.